There we go. All right, let's rock and roll, y'all. That's all right. We back. We back. Now, let's talk about these patterns real quick. Let's kind of dive back into this. So we was talking about the falling wedge. As you can see, the market pushed up. This line indicate buyers. The buyers are pushing the market up. Actually, and then all of a sudden, the market just stops. The sellers come in, push the market down, back up, down, back up, down. You can see how it starts to narrow at the end. Typically, that's a fall. That's called a falling wedge. So as the market is dropping, once again, we typically anticipate a falling wedge to be a continuation of the actual trend. The trend is going up, drop. So guess what? We anticipate getting into this trade right about here. Keep it simple, y'all. Keep it simple. These are just, I'm not saying trading is easy. I don't want people to think trading is easy. We got to get off that whole sales pitch. Trading is not easy, but understanding or having some simplistic when it comes to understanding why you're getting into certain trades, that should be simple to you. That should be very simple to you. Basic falling wedge. Even if we haven't taken the support and resistance lines yet, we haven't even done that yet. Even if we don't understand support and resistance, I can look at this illustrated pattern right here and see that they drew lines at the top of the candles and they drew lines at the bottom of the candles. Keep it simple, y'all. And then it went a step further. It said, hey, you know what? It says entry, enter, get in here. All of that. Take the trade. So it's at some point, I anticipate taking that trade in this direction going up once it breaks this level. That's a sort of an idea to give you a strategy of when to take that trade. When to take that trade. What about the bullish rectangle? What about this right here? Market pushed up and it's going sideways, completely sideways. This here had a slant coming down. This here is going sideways. We can see that bullish rectangle. So guess what? We anticipate that to go up. We're anticipating that to go up in a higher direction. Simple. Simple, simple, simple. Trade what you can see. Keep it simple, y'all. Bullish pennants. Now, you don't have to learn every last one of these particular trades, patterns. Most of your professional traders probably going to have about 2 to 3 trades that they trade on a day-to-day basis. There's nothing wrong with you having a multitude of trades up under your belt. There's nothing wrong with that. It just gives you more opportunity to make more money. That's it. Trade what you can see. If you only saw a falling wedge, that's your trade. That's your cash cow. If you only saw a bearish rectangle, bullish rectangle, that's your cash cow. Look at the bearish rectangle. The market actually dropped, went into a channel where the market is going up and down, up and down, up and down. The market is going up and down, but guess what? The actual trend was coming down. So once it fell off into that channel, we anticipated to come down even more. Come down even more. We still got more factors and features that we have to look into when we're trading. We still got more, we still got more things we got to look into. So we're not ready to say, okay, all right, I'm ready now. Still got some more little pieces that we want to add to the puzzle on this 4-part checklist. Remember, this is just 2. We're 50% of a confirmational trade that we feel comfortable pressing the button. So flag patterns, you will hear that little corny term, trend is your friend. You'll hear it all the time. Most traders say it, most traders use it. It's not nothing they made up. Like I said, all of this stuff here, one trader is not making up anything. We're talking about a universal language. I'm not telling you guys nothing that is not a universal language. This is a universal language. You can look it up, you can Google it, you can see it for yourself. You just got to understand. Many of us just don't understand what we're looking at. Rising wedge, this is one of our favorites as well. Rising wedge right in here. The market dropped, pushed up a little bit, went into a channel, pushed up. The continuation of that trend came down. Rising wedge, once we see a rising wedge, we anticipate that market to do what? Drop. Keep it simple. One thing I want you guys to remember as well, very important, very important. For every action, there is an opposite reaction in the market. Every pattern that you have going up, there's an opposite pattern coming down. Every candle pattern you have going up, there's an opposite pattern coming down. That is why I understand we make money whether the market go up and down, up and down. Very important that you understand what you're looking at, so you're not so you know, you're not so boggled down by just following the media, because a lot of you guys just trade fundamentals. That media gets the best of it. The media talk, people posting and things like that. You're not taking better judgments of your own trade. If there's a falling wedge, you got falling wedge going up, you got a rising wedge coming down. You got a bullish rectangle going up, you got a bearish rectangle coming down. There's always going to be an opposite reaction to every trade that you take. There's a method going up, there's a method coming down. We're going to break this down here a little bit more shortly, a little bit later. We're going to break this down even more just to kind of give you guys a general concept of how it actually looks. Let's break this down, but just keep that in mind when we're talking about these trend patterns right here. And we're going to go a little bit more deep into that. Let's talk about some of the common candle patterns that we talk about. Let's talk about some of the common candle chart patterns. I'm sorry, I said candle patterns. Let's talk about that. Got bullish patterns, bearish reversal patterns, bullish reversal patterns. These are some common patterns that you will see every day on any particular chart that you're trading on. Between flag patterns and your common patterns, you will see these every day. Every day. Let's talk about the bullish patterns. You can see how the candles are going up. Came into we can identify this as an M pattern. Some people call it M. Some people call it double tops. I don't care what you call it. You just need to be able to identify when you see it. Need to identify it when you see it. Now, you see how this pattern right here went up? Went into an M pattern. This is the one we're going to break down here shortly. We're going to break this right here down because, as you can see, this says bullish patterns right here. But that M pattern we anticipate to come out. Look, the double top is a bearish reversal pattern. That's a bearish pattern. We anticipate that to drop and come down. Somebody's in the waiting room. We anticipate that to drop and come down right in here. Let me get there. Terrell might be busy. Let's see. All right, so we're going to talk about this right here, break this down. What about the cup and handle? Cup and handle right here. You see the cup dips. You got the handle right over here. So once we get that bullish pattern, we anticipate the market to go back up. That's a bullish play. Once we identify that, guys, one thing about these patterns look beautiful. They're nice. They're nicely designed. They're neat. Don't expect every pattern to be as beautifully illustrated as these patterns here that we're looking at now. We practice and practice and practice because we train our eyes to see these patterns over and over and over and over and over again. I'm keeping it extremely simple. I want to keep it elementary. Matter of fact, I want to keep it elementary. Let's keep it elementary. I want to keep it as simple as possible. I don't want you guys overthinking this stuff. Look at the bear patterns here. Bear patterns, we anticipate that market to drop. Look, dropped here, stopped, pushed up, came down, reversed. This is bearish. We're going to get into that. Remember, there's always an opposite reaction. If there's a pattern going up, guess what? There's a pattern coming down. This is a bear. This is an inverted cup and handle. Look at that. And you anticipate that market to drop. You wait for it to break those levels and you take that trade coming down. Descending triangle. You can see that. Look at the triangle right in here. Looks like you had an M in here. M is a very popular because it's pretty much easy to see. A lot of groups teach M's and M's and W's, and that's all most people typically will talk about, M's and W's. But that is okay. You can make money off of that. That is your cash cow. That's your cash cow. That's what you were taught. That's all you see. That is your cash cow. You will start to learn and add more chart patterns to your arsenal to make more money. Double top. You guys, we've talked about the head and shoulder right in here. We've talked about that head and shoulder. Push up, give you that first shoulder, come down, pushes up. Here's the head. come down. Here's that shoulder. And we anticipate the market to drop. We anticipate taking it down. Now, let me show you guys something real quick when it comes to this head and shoulder right in here. Now, if we anticipate this head and shoulder right in here, so this is top head and shoulder. So basically, I like to call this little piece right here that underarm. Here's that first shoulder. Here's that underarm. Comes down, pushes up. Here's the head. You can see the head actually went a little bit higher than that first peak. Went a little bit higher than that first peak. Comes back down, stops, gives you that second shoulder, which is typically, in most cases, sometimes it's going to be about equivalent to the same price level as this first shoulder. Sometimes it may be a little abstractish. Maybe a little abstractish right in there, but you can see the head is typically always going to be higher than the two peaks on the side. That's that head and shoulder. Now, typically the head and shoulder will have an entry point right in here. You see how that line is drawn from this base, we call this that underarm pit, to that underarm. That's counteraction. That's counteraction. That's counteraction. That's where the market actually stopped and reversed. That gave us that counteraction that we're looking for to give us that. We'll actually cover this piece here, but you'll notice that there's an entry line drawn from this level to this level right in here.
They make more co-hosts though.
Oh, okay. So now you see how I drew that line. This is very important, very, very, very important. Our goal is to get into this trade as soon as possible so we can make more money. That's our goal. That's our goal. We want to make more money. We want to get into these trades so we can make more money. So now, drawing this line right here, you can see where my target entry happens right in here. Here's my buy level. This is where I'm looking in to get into this trade, taking it coming down at some point. Some of you may draw your line, your head and shoulder. You may see this shoulder piece come down here, and then you're anticipated trying to get into this trade way down here. When you're trying to identify your patterns, you want to try to emulate these illustrated patterns as close as possible. Keep it simple, y'all. We're not going to make it seem like it's just something over the top or something like that. We're keeping it simple. Keeping it simple. That little bit right there could cost you because you're missing the entire trade. So if we're anticipating the top head and shoulder to come down, the bottom head and shoulder right here, your line is slanted down. Top head and shoulder, the line is slanted up. Bottom head and shoulder, line is slanted down. Target entry happens in there. That is very important. Very important. Many of you would do this right here. You'll have a piece right here, where it comes up, the little underarm piece comes up right in here, and you'll draw your line that way. We have to be careful about that. You done missed the whole trade. Our idea is to try to emulate these patterns. I can't say it no simpler than that. I can't say it no simpler than that. You guys think you're overthinking this stuff. If I see something on the chart, I'm going to try to emulate just that simple, y'all. That little piece right there could make you a lot of money or cost you a lot of money. Getting into that trade too late. Very important. Very important. So now, right in here, look at this. You got your triple top, first peak, second peak, third peak. You see your head and shoulder, the two sides are lower than the head. Here, your triple top, everything is all of your points where you have counteraction. And I'm trying to find my annotate here so I can draw on the screen. All my points where I have counteraction right in here pretty much are at the same level, at the same price point, or close to it. They're close to that same price point. That's a triple top. You see that triple top, you anticipate that market to drop. Guess what? We're taking it down. You're setting those strategies up. Now, there are some other factors that we have to look at when we're actually taking the trade. That, before we get in those trades, there are some other factors now that we got to make sure that we're implementing before we just jump in these trades. But this right here, this is the very general basis of what we're talking about. Mo, I can't see you in the chat, so I don't see your name.
Mo Pizzle.
Okay. All right, so Mo Pizzle. I get you in a minute. I can't find. All right, so right in here. So those little pieces are very, very, very important. Those little pieces are very important when we're trying to identify that. But we're just looking at general patterns. Trust me, guys, these patterns will jump out at you on the charts. You will start to see these patterns. You will start to see them over and over and over again. Let's take it a little bit. Let's take it just a little bit deeper. Let's take it a step further. Let's take it a step further. Hold on, let me get rid of the lines on here. Let's take it a step further. Now, once again, remember, now let's go back to this right here. Reversal right in here. So we got bullish patterns, but look at this M right here. It's looking real bullish. Look at this bearish pattern. This is looking bullish. This is looking bearish. But this is saying this is a double top. We can see that. That's an M. We can see that. Many of us would think the market is coming down. This is saying the market is going up. Many of us would think the market is going up, but this is coming back down. Let's start there. Let's get a little bit deeper into trading, because pattern wise, we're going to learn those patterns. We're going to see those over and over and over again. We'll see those. But let's understand what happens when a pattern doesn't do what we want it to do. But we saw something. We saw that W. Bam, broke this line right in here, but it reversed on us and came down. Broke that line right in there and broke down. Neckline of this pattern, which plays a role of the confirmation signal in the green circle. You see that the price action breaks that neckline right here. So we anticipate, so we jumping in because we saw that double. We called it out. In actuality, our goal is to get in down here. We'll talk about that later. We'll talk about that next week. Our goal is to get in down here. But there's nothing wrong with waiting for the entirety of that pattern to happen before you get in that trade, y'all. There's nothing wrong with that. Nothing wrong for the entirety of that trade to happen before you actually take that trade. Nothing wrong with that at all. So right in here, we can see where the price actually broke our target entry. Price broke our target entry. At some particular point, we decided to get into this trade right here. We're taking it going up. Taking it going up. However, the price action returns and initiate a strong bearish move. That means it actually stomped on us, went up a little bit, gave us a few dollars, reversed on us, and changed his mind and said, forget it, I'm going down. It gets us, that gets a lot of traders. That gets a lot of traders in trouble. The double bottom setup failed, which has caught many traders on the wrong side of the market. But why? But why? We just talked about it. That's why. The truth is that that pattern failed, usually part of something bigger. It's part of something bigger. That is actually a bearish pattern. That is actually a bearish pattern. In many cases, you will see that your failure pattern is evolving into another pattern. That means the pattern was not even completed. It's not even completed. That's why I say, guys, we halfway there. We only 50%. We got some ways to go. We got some ways to go. Still got some learning. Either on your trading time frame or a higher time frame. If you take a closer look, you will notice that the failed double bottom eventually turned into an expanding triangle. You know what? Let's keep it simple. We're going to talk about expanding triangles. Let's even keep it even simpler than that. It actually turned into, look at that, right in here. Look at that. Bearish rectangle. Drop, sideways, and drop. Had a W in here, but that was not the end all, be all to that pattern. This is what captures people. Now, here's the catch, guys. Here's the catch. You can trade inside that trend, but this is just where you are disciplined. This is where you're disciplined. This is where we have those other features, especially on my 4-part checklist, that can help you to identify these type of reactions. Until you get comfortable with your trades and you get disciplined and you understand, okay, I need to exit out that trade at the most optimal time. I'm very, very disciplined when it comes to my money. That's going to take something for you guys to work on. It can be done. It just takes work. Takes work. But instead of it just stopping right here, it was an overall pattern right in here. Drop, bearish rectangle, come down. That's typically what happens when we are actually taking our trades. We're not looking at I notice most people always looking at small pieces, like right in here. I can see several people right now. I see a W, I see a double bottom right here for them. Neglecting this entire channel right here. It is okay to take this trade, but you have to shift your mind and your behavior to understand, I'm probably not going to be in this trade that long. I probably need to be careful. You can never predict how high the market will go or how low it's going to go. You're always going to get in early. You're always going to get in too early. You're always going to get in too late. That's always going to happen in most cases. I'm just, it is what it is. But, I typically see a lot of people trading inside the channel because of the small patterns they see inside that channel, and they rarely look at the overall picture. Rarely look at the overall picture. Very important, y'all. Very important. Patterns are simple. Patterns are simple. You will start to see those patterns. Drop. I'm keeping it simple. I'm not even, like I said, we're not doing all that, making it seem like it's just some, we're keeping it basic. We're keeping it simple. Drop right in here. You got your bearish rectangle. Bearish rectangle, which is this pattern right here. Look at that image still drawing on my screen. Look at that image right here. Remember, the flag patterns are typically continuations of the overall trend. If the market dropped into that channel, the market is going sideways. We're not going to keep it simple. We're not going to get into all that trying to make it seem technical. The market, we understand what we know what it looked like when the market is going up. We know what it looked like when the market is coming down. We know what it looked like when the market is going sideways. Stop playing with us. Stop playing with us. Stop playing with us. We can make some decent money on some elementary type stuff. Market is going sideways. The overall trend was coming down sideways, so we anticipate that overall trend to continue coming down even more. So good stuff, good stuff. All right, let's keep it rolling. Let's keep it rolling. It don't take much to it. It don't take much to do it. Not much at all. Let me erase these lines real quick. Get rid of these lines off of my chart. So yeah, so now, and don't feel like you did something, hey, you got it wrong, because it's not about showboating. It's not about showboating. I got it right. I got it, you got it wrong. It's not about that. It's not about that. Because yeah, many of us would have taken this trade right here. If we hadn't looked at, all the other factors and anything like that, a lot of people would have taken this trade. That's okay. Guess what? If it starts go south on you, guess what? You got to be disciplined enough to get out. That's where your risk management comes into play. But I digress. We'll get into that later. We're not talking about risk right now. We're getting there. Some abstractish patterns right in here. We can see that. We can see that. I see a couple of patterns in here. This is the old trade I took back in 2019. I can see this pattern here. Gave me a slight little double bottom right here. Drop, stopped at this level. Push right here. Here's my resistant level right here. Stop level, a target entry level. Came down, gave my second peak, double bottom, pushed up, target entry. Target entry. This could even been this right here. Could have been first peak, head, second peak, could have even been an upside down bottom, head and shoulder. If you see something, you need to be able to distinguish when you draw your patterns. It needs to make sense. A recommendation: try to trade things that are very, very, very similar to those illustrated patterns. That may sound elementary, as all outdoors, but you can make thousands of dollars just doing that. You want to keep it simple. Those of y'all that want it hard or something like that, I got a couple of groups for you. We don't do that over here. Not going to even make it seem that way. We're not going to do that. Keep it simple. Double bottom. Right in here. Abstractish double top. Actually gave me a double top. Lines right here. Market drop. Even at this level here, even coming down lower, even gave me something else. First peak, second peak, third peak. 3 descending peaks. You will start to learn these patterns over and over and over and over and over and over again. The yellow lines are just indicating the actual trade itself on these particular plays here. They're just indicating what you see.
Is that the first top and the second top? That's what I thought they were indicating.
Okay, mute. Get off my mute. Get out of here. That's my dog right there. All right, so right in here, first peak, second peak, third peak. So you can see the market drop, gave me that double top, came all the way down, did its thing. Went a little bit further than I probably anticipated, but hey, it is what it is, but gave me something else. So, but you can see how abstractish these patterns tend to form. You can see how abstractish they look. They're not always going to be the best developed patterns out there. That's why you practice, so you can train your eyes to identify these patterns. This right here, prime example. Not necessarily a double top, more like a triple top right in here. First peak, second peak, third peak, drop, bearish rectangle. Nice play. Nice play. I took this back in 2019. Nice play. So you can see that. You can see those patterns. Let's for those of y'all that can't see it. Come down and drop. Look at that. Let this right here fool you. That's all right. We got a solution for that. We'll talk about that next week. Got a solution for that, but you see the majority of the pattern stayed inside of this bearish rectangle, came down. It's a bearish rectangle. Drop. Trade what you can see. We do too much trying to outdo each other. That's why I have to stop sometime and be like, okay, y'all, relax, calm down. Let's get back to bed. All that trying to do this and over one another, we ain't got time for that. We're trying to make money. We're trying to make money. Keep it simple. If you see something different, hey, you know what? I see something different. You may see something I don't see. I may see something you don't see. We don't even have to see the same trade. You see some, hey, Mike, trade. Hey, I see, this is what I see. I see this right here. Okay, boom. Hey, you know what? I see that too. Done deal. That's how we do over here. That's how we've been doing it. That's how you do it. Keep it simple. Bottom, head, and shoulder. Here, push up, small shoulder, breaks out, pushes up. You will see these trades on a chart. You will see these patterns on a chart. You will see them. They will start to jump out at you. Simple. Simple, simple, simple. I will send you guys a list of charts that you can look at, that you can focus on. That you
Last
can,
week,
huh?
you got another one? 'Cause I sent some last week.
Oh, you did? Okay, we'll probably, yeah. Yeah, I'll put it back in the group so it'll be based on this one here. You said charts or candles or combination?
I sent both of them.
Okay. All right. So we'll bring it down to the bottom. Look at this bottom, head, and shoulder. Look at this shoulder peak right here. Now, look at this right here though. See, I got this shoulder here. Here's the head. Here's that underarm to underarm right here. You see how that line is slanted? That line ain't going like this. That line is coming down. My goal is to get in this trade as soon as possible. See how this arm right here look like a little broken arm right here? You train your eyes to see these type of reactions. You train your eyes to see these reactions. That is why you practice, y'all. That is why you practice. It's simple. We're not gonna make it difficult. This week, remember, this week too, week 2. So we got 4 more pieces to that 4-part checklist. 4 more pieces to that 4-part checklist.
2.
That helps, I'm sorry, 2 more pieces. What did I say, 4? 2 more
You
pieces.
said focus 2.
2 more pieces. 2 more pieces to that 4-part checklist that helps us anticipate getting in and out of these trades. Getting in and out of these trades. All right, let's release everybody out to the wild. What you got?
I
What you
did.
got?
He good.
What you got for me? What you got for me? We're gonna keep it simple.
Can I really ask questions for real this time?
You can this time. You can right now. Come on, hurry up,
Okay.
man. Just one,
Okay.
no. Just
So
one.
okay,
No, I'm just saying.
just one, but I mean, it's kind of like what I see in the morning during the live. Or is it practical to look at 4 4 stocks at the same time? You know how you all have it in the morning, like a fly chart? Or is it practice to look at 4 simultaneously, or just start with 1 at a time?
So I got it. So what the charts we be looking at Them be those are two different indices we're looking at. We're just looking at them on two different time frames. The top charts usually be like the 1 minute, and the bottom charts be like the 5 minute. But we'll be looking at the S&P and NASDAQ at the same time. So what I tell you is learn to look at one chart first. Learn to look at one chart first. Even the minute, start with the minute. You want to start with the 5, start with the 5. But look at one chart first. You start recognizing patterns on one chart, then you don't trade off two charts until you got one chart now, you know what I mean? But we use two charts to basically look at if they're gonna emulate each other. Not necessarily giving you the same pattern, but if both of them is giving us an indication that they're both giving a bullish pattern, like one could be a bullish rectangle on the 1 minute, and the 5 minute could be a bottom, head, and shoulder. But either way, we're still anticipating the market going up. You see what I'm saying?
Okay, tracking. Nope, makes sense. Okay. Thank you.
So, yeah.
For me, I like to look at a split screen of one, like if I'm trading SPY, I like to have a split screen of the different indices. I mean, not indices, but the different time frames. Like I look at the 5 minute, the 1 hour, 4 hour, 1 day. So I prefer to do my analyzations on a split screen.
Okay, yes, ma'am.
Yep.
Okay, so with that too, and that this is for all the OGs on the line. So when we're looking at these charts and looking at the different patterns, so on and so forth, is it we're putting the lines based upon our comfortability until we get used to seeing how the patterns kind of maneuver, or is it, I think Mr. Terrell had mentioned it before, the lines are helping us to get to a point where we can look at a blank chart. Is that correct?
That's it.
Okay, well.
That's it.
I feel like you always want to use lines though. Even if
you
are a good trader, you know, you still want to use lines just for like confirmation, just to show yourself what you're doing.
Absolutely. Because even with blank charts, I still have lines on that because the lines is basically telling you what the market doing. It's going to tell you what the reversal, what the counteraction is going on at.
Y'all know my philosophy. Draw on your charts. Keep it elementary. No, keep it elementary. Draw on your charts. Just make sure that the lines are not, they're not abstracting your view. So let's go back to that first question. I like both answers, Terrell and Kim, both answers are great, typically. For me, when you see me trade in the morning, when you see me trade live in the morning, I have 4 screens up. I used to trade with about 8 to 10 different charts on the screen, 8 to 10 different charts on the screen. Now, though I'm looking at all of those different charts at the same time, you got to remember, I only have a certain amount of patterns in my head that I consider my cash cow. So if I'm looking at 5 charts, my eyes are going to hone in on the pattern that I'm comfortable to trade on all of those charts, even if they all go in the same direction. They go in the same direction, and I see that bottom head and shoulder on the X chart. Guess what? That's the chart I'm going to trade off of. Even if they all go in the same direction, I'm trading what makes me comfortable. So you're still looking for those type of trend patterns that you're comfortable to trade. That makes sense. Makes sense.
Yes.
Makes it.
So let's see.
Hey, Mike, it's Renee. I have a question for you.
Hey.
When you're doing your pre-market review, do you typically trade the same things, or do you go into the market and, like you just stated, you look for the pattern and you trade the things that give you the best pattern?
Yes. Even if I have a list on my watch list, I can easily go through, a couple of dozen charts, maybe even 100 plus charts really quick, because I'm just looking for something that jumps out at us. I don't know if you guys who've been rocking with us for about a week or so, I don't know if you noticed that when we click on charts, you can always tell when we all see the same thing, or we see something. Oh, we ready. But when we don't see the same thing, everybody, I see this, I see that, we all over the place. We don't see, there's a lot of commotion going on. But when we see those trades, it just jumps out at us. That's your cash cow. So yeah, you're just looking for what you can see.
Trade what makes you money.
Trade what makes you money. I don't care if it's the same pattern. No, I don't care if you see a double bottom every trade that you take. I don't care. Shit. And if it makes you money, guess what? You trade what you can see. It ain't about keeping up with the Joneses or trying to show out. Nah, shoot, it makes you money.
Those patterns are going to keep repeating themselves over and over and over again. The good thing about it, if you miss one, there'll be another one coming around right around the corner.
Yes, that is so true. So true. What else y'all got? Anybody else? What else you got?
Are we going to go over the trades for this week?
Yep, we're about to do it in a second, so y'all can hang around with us. This is for my group here, new people. Feel free to look, enjoy whatever, it's up to you right now. You're not done with the course, so hey, don't ask us no questions. Don't ask no questions. Let me see. Sharon, don't ask no question. Siobhan, don't ask no question. You asked a question already, Miss James.
Yes, sir. I won't have no question. I'm just gonna look.
The
Yes,
good
sir.
thing about it is look, and then when we're doing it, go along to it. If you have to draw it out on a piece of paper, draw it out on a piece of paper. The more you do it, is getting repetitions in there.
Okay, first thing I want to talk about, so we actually about to go into our nightly training, nightly chart review here. So y'all can just join along, hang out with us for a little bit longer. I'm not gonna kick anybody out right now.
Little bonus.
I ain't gonna kick you out right now because I like y'all. Y'all all right. I want to show y'all something that pissed me off a little bit. Oh, wait a minute, this moving. Hold on, I'm in the money. Wait a minute, I'm in some money.
Yeah, boy. Look,
Man, I'm in some money.
you might well let her ride.
Yeah, I ain't getting out of there. Remember that little $27 I put in there last night? That's a 27. Trying to see if I can turn to a few hundred. That's all. And see if we can turn that into some money. We'll keep an eye on that. But so I want to tell y'all something that upset us. Oh shoot, let me start recording. Let me send this to the Facebook group. Stop